Hi, this is Peter Hans, and welcome to this week's episode of Between Two Chains. Today I'm joined by Byron Gilliam, market strategist for Blockworks. Byron's interesting because he spent 25 plus years in traditional financial markets, including as a equity trader for Citi in London. So he has a very unique perspective on the digital assets industry that we talk about because he's been in the market for about a year now. His daily newsletter that he publishes for Blockworks is a absolute must read, and I think really speaks to the traditional investor in a way like very few do right now. We agree on some things, disagree on a lot of things as well. So I hope you enjoy the episode, and as always, please rate and review. Thanks so much. Bye. This commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. Okay. Hi, everyone. This is Peter Hans, and welcome to this week's episode of Between Two Chains. Today, we're recording this episode on Wednesday, November 30th. Not sure exactly when it's going to be released, but just for the purposes of context around what we're talking about. And today I'm joined by Byron Gilliam, senior market strategist at Blockworks, who I'm frankly really excited to have on the show and talk to. He's got a incredible daily newsletter, writes really well, and has a history in what I guess people call TradFi, which resonates a lot, I think, with me and the audience of this show. So Byron, welcome. Great to have you on.
Good. It's great to be here. I'm a big fan of you guys, and I read all of your stuff and watch your webinars. So it's really fun to be a part of it.
Great. Yeah, appreciate it. So maybe to start here, would love to just learn a little bit and for the audience about you and your background and I know it's like the most recycled question, but how you move from, I think you did equity trading, equity sales trading, traditional capital markets at a couple of different money center banks, and then how you got involved in digital assets.
Yeah, my crypto origin story is the boringest it's the boringest crypto origin story that could possibly be. I was basically sort of aging out of equities trading and was poking around looking for something different to do and responded to a job advert on LinkedIn. And that is so boring that I've considered just making up a different one and something more exciting. I realized that it's actually worth relating because I think I've been writing the newsletter for Blockworks for about 14 months now, and to the extent that it's been successful and that people have responded to it, I think that it's because I am just basically writing about what I'm learning as I'm learning it, and I think people have responded to that. And the fact that I was just that I'm not a lasered-eyed true believer, that I have come to this just because I was looking for a job. I think that's actually been to my benefit because I can kind of approach it objectively and try to figure it out from a pretty normal perspective, and people seem to respond to that.
Yeah, and so I mean, given that, what I hate to say, like, what do you think? But well, maybe this. How has your opinion changed? From, I guess, your initial introduction and research into kind of where we are now, and it could be for a variety of reasons.
Yeah, that's a pretty big question, and so much has changed in the last year. I think I just heard on a TV show yesterday the old quote from Lenin that there are decades where nothing happens, and then weeks where decades happen. It feels like this, and this feels like we've had multiple weeks where decades have happened. So so much has happened since I started paying attention 14 months ago. I think though, from when I was getting into it in the beginning, I came to it with the assumption that crypto tokens were going to be basically just tech stocks, except for higher beta. And I thought they were going to be higher beta tech stocks, which I think is understandable because, they're software. So they seem like, and, software is the highest beta kind of tech stock. So I just thought they were going to be like software stocks, but even higher beta. And I thought that protocols, away from ETH and Bitcoin, I thought the protocols were basically going to be like companies, like they've got a business plan and they're going to make money and they're going to return money to holders. And I quickly found out that neither of those things are true. Tokens are not stocks and protocols are not companies. But the thing I think that was most surprising is that everybody talks about them like they are. And even after, all that we've learned over the last year, people still talk about them like they are, probably even more so than a year ago. So I think that's probably been the biggest surprise to me. I guess the question was not surprise, but the question was what I think of the entire thing. I suppose that big picture, I guess I've gotten more skeptical of crypto as an investment. I am probably more optimistic about crypto as a technology. That's maybe a little bit cliche, the old blockchain, not Bitcoin thing. But my early on thesis was that crypto is not necessarily investable. Because it's not going to be great for investors, but that it will be great for users. And I think that with all we've learned that year, I think that I hold that opinion a bit more strongly than ever.
Yeah, no, and look, I think that definitely does answer the question in a lot of ways. And what surprised you is also kind of what you think, and I think I understand certainly where you're coming from. I mean, it's a big universe. I'm even hesitant to call it an asset class, frankly, because I'm not sure that it is an asset class. And the barrier to entry of creating a new token or coin is essentially zero, and there's no mechanism to extinguish them. There's no bankruptcy, there's no delistings, right? So they can only grow in terms of absolute number. And then when you get environments like we've had for the past, I don't know, 6 months or so, and then I think is only more pronounced now, where the entire size of the market is essentially a zero-sum game. It makes it very tough for it to be, I would say, passively investable. I think that if I understand, if I had to listen to the kind of comment, I'm more bullish on the technology but less on the investable asset classes. Essentially, that the blockchain as a technology and I guess a token as an asset allows for utility for one that is a user, right, or someone who's actively participating in some sort of business or protocol, and then there could be financial benefits as well, not unlike there are with like a rewards program, but but that doesn't necessarily mean that every token is going to be passively investable, say like an equity is designed to be.
Yeah, I agree with that. I think crypto is, I guess it's in the name, cryptocurrency. I think crypto is more as an asset class, which I'm not sure that it is, like you say. But if it's going to be an asset class, I think you have to approach it more like currencies or commodities. Unfortunately, the SEC disagrees with that. But just as a, like I said, I expected tokens to trade like stocks, but to me, they really trade more like commodities or currencies. They're more naturally mean reverting than stocks are. I feel like stocks are more naturally trending, and tokens, crypto tokens, surprisingly to me, are less like that. I thought, because they were going to be higher beta, I assumed that they would also be more trending, but I don't think that's like the case. That might also just be, recency bias, because that's what's happened over the last year that I've been paying attention to.
Sure.
But that's that seems to me to be the nature of crypto. I think is that they're going to be more like currencies and commodities, and less like equities.
Yeah, I mean, I think there's. Well, let me ask this: how do you think about the kind of, well, it's just for the purposes of this question, let's just say it is an asset class, right? Like, crypto or digital assets. How do you differentiate amongst all of the various types of tokens, right? Because you can essentially design a token to represent anything, from just kind of ownership of a physical asset, like an NFT could be, to Bitcoin, which is very specific, to ETH, which is more, in my mind, infrastructure, and then go on down the list, right? So how do you think about the taxonomy, or breaking up the universe, if at all?
Yeah, it's not that I don't think I haven't thought about that too much. I think just off the top of my head, I would say that there's Bitcoin, of course, which is a whole different discussion. I think that's in a category of its own.
Mhm.
And then there's ETH, which to me is the closest thing to an equity, in the sense that they return, Ethereum network has, collects fees and then returns it to shareholders, in quotation marks, via buybacks, sort of. And then I think there's everything else, everything else being, all of the altcoins. And then, you could certainly break that down in, 15 or 20 different ways. But just as far as, in the way that gets like a little bit too in the weeds to me. So in my mind, it's kind of Bitcoin, Ether, and altcoins would be the taxonomy.
Hmm. Interesting. And so I guess in that from that standpoint, it really, okay, so we'll look at it this way. So the way I think about it, and I talked to Jeff a lot about this, is I always looked at it as, in the future, and this is kind of where I saw things going. The token is essentially just a different part of a cap structure, right? You have equity, you have debt, and then you have a token, and the benefit of the token is that it could serve to, better align the customers of a business, say, with the financial performance of the business. And there's all sorts of ways in which that could be done. And you do, it's even a little different than rewards, or miles, right? Because you can create, secondary markets in it, where the more people who are interested in anything from Netflix to a local restaurant that has a token associated with it, right? The more demand for that, the more you can exchange it if you no longer go there, or trade it for something else, or sell it for something else. Now, it doesn't mean that you know every token has you know 10x, 100x potential, right? I think that's not necessarily in the design of the technology. But you also can't have, I shouldn't say can't have, but you also typically don't see revolutionary technologies introduced that require a totally new, like, infrastructure, without there being some very significant investment opportunities. Whether it's in the picks and shovels, or whether it's in actual, um, businesses that leverage it. So I mean, altcoins is not something I would typically use, because I think it originated as, like, you have Bitcoin, and then you have alternatives to Bitcoin, which essentially are trying to be currencies. And I think that if you look at the digital asset universe right now, and there's, I don't know, 10,000, 20,000 tokens, maybe way more. 99% of them are probably useless right now. And then I think you have ETH, and you have some infrastructure play, and then a lot of what we'll see probably in the future isn't terribly dissimilar to what we looked like coming out of the tech bubble, where you had, Amazon and maybe one or two kind of software players survive or web players survive, and then a couple of infrastructure players survive, and then the majority of them kind of die off, and others resurface with new businesses. So sorry, I'm just so now if I think about it, like, and I think about your, because I wasn't expecting you to say that. If I think about the kind of ETH, Bitcoin, altcoins, okay, so take something like a chain link, whether it's as a business or the token, and I don't have an opinion on the token, versus something like Uniswap versus a BNB. Like, those are all very different um, you know businesses. The tokens represent different things, are structured in different ways, but you would just kind of like bucket them all together.
Well, just because I have to simplify it, otherwise it just makes my brain hurt. But
Hmm.
I think maybe the reason why I do that is because I think outside of uh, Ether and Bitcoin, uh, everyone everything else is thought of as a sort of a pseudo business and a pseudo equity, where the a protocol is going to create some excess returns and then return them to token holders in some way. Um, so I think that's, and I'm a little bit skeptical of the investability of that way of looking at crypto. So I think that's just what I meant. I think
Hmm.
uh, Bitcoin is a currency, and Ether is the world's computer, and then everything else is some kind of pseudo business stroke pseudo equity.
Yeah, no, and I do think that makes sense, because there's a couple probably tokens I can think of where they actually have a mechanism by which to pass on a what in essence is a dividend of some sort. But then not only are you relying on the structure of the token is great, but then the actual underlying business has to succeed too. So that's that. But those are very, very few and far between. And yeah, I think your point about equity-like instruments or business-like instruments is extremely valid. And I think there is and has been a lot of um, investment assumptions based on the fact that these are um, equity type instruments. But and you've written about this too, and the fact of the matter is, they're very simply not structured the same way. Like, as an investor, you don't have the same rights that you do. And I think one of the more interesting things you wrote recently, might have even been today, is about governance in the space, and that's something that we've talked about a lot too, Jeff and I, where and I look at it as very simply as, like, if you're an equity shareholder, right, you can vote, and that vote appoints a board of directors, and that board of directors can make decisions. Whereas, in a governance token, you kind of bypass the board of directors. But there's a lot that can go right or wrong with that as well. Like, in spirit, I think it makes sense, but I'm not sure how applicable it is in the real world, at least right now. So yeah, would love to first off build upon that a little bit, and what your thoughts are.
Yeah, I think that's one of the core issues in crypto investing, not in crypto itself, but in crypto investing. I think that's one of the core issues and maybe core misperceptions is the votes that you get with most tokens gives the appearance of ownership, but it does not give you genuine ownership. And it even, in a lot of ways, it seems like more of an ownership than you get in equities, because you get to vote on everything. You get to vote on, the how much money you're going to spend on merch and ETH Denver or whatever. So in some ways, it makes you feel like you're more of an owner, but in reality, it does not confer ownership. The real, in equities, the real ownership is conferred by not the vote that you have, which nobody uses. Like,
Hmm.
I've voted like one time in a stock that I've owned in my entire life. The real ownership is conferred by the legal system. If you buy a stock, you have a legal claim on future cash flows. You have a legal claim on current assets, and the management of that company is bound by a fiduciary duty to look after shareholders. And you don't have any of that in crypto. You buy a token, you don't have a legal claim on cash flows. You don't have a legal claim on assets. The people that control the multi-sig, they can transfer the entire treasury to themselves, and there's nothing as a token holder that you can do about it other than complain on Twitter and hope to shame them into giving it back.
Mm-hmm.
And in that way, that's why I question the idea of crypto being an asset class, because crypto themselves, in my opinion, are not really assets, because the definition of an asset is that it is somebody's liability. I think if you look at a company's balance sheet, the shareholder equity is in the liability column, right? I'm not much of an accountant. But every asset is somebody else's liability. A stock is an asset because the company is going to owe you their future cash flows, right? And a crypto is nobody's liability. There's no, if you own a crypto token, nobody is liable to do anything for you, unless it's hard coded into the smart contract. And then there are some cases where future cash flows are going to be returned to token holders because that's how the smart contracts are hard coded, and those to me look more like assets. But those are kind of the exception to the rule, I think.
Yeah, I mean, I might push back a little bit on that, in just the sense that if you were an equity holder, you don't necessarily have a claim on the future cash flows like you're a creditor, right? Because your assets equals your liability plus your equity, right? So if I there are assets that I own individually where those assets are no one's liability, right? And then they'd be balanced on the balance sheet by my equity, right? Even if a company just mints cash, there's nothing legal that says they have to pay it out to shareholders, right? But as a shareholder, you own the business, you own your pro rata share of the business, and if that equity, because the price of the stock is based on supply and demand of the market, if that never changes hands, right? The only way you actually ever see any return is if the business sells or liquidates or decides to make a distribution to shareholders. But you don't actually have I guess you could, sue, but the way to really enact change would be to, appoint a new board that, and then this is why you see proxy battles and activist fights and things like that. So I guess on a governance standpoint, maybe it's a little bit more direct, and then that begs different questions about, like, centralization versus decentralization. Like, obviously I think it's less binary than that, and if that truly matters or not. But it sounds more and more just kind of like the thought process that you have is, the technology allows for the creation of a part of a cap structure. I won't even call it an asset because it's not necessarily an asset, I suppose. Maybe it is, where it's investable. Investable is probably the wrong word in many cases. I think we can look at ETH and say that is investable, because if the technology of blockchain continues to grow and ETH is the backbone of it, and there's, you can stake it, get a yield, right? Like, that's an investable play. And there are others, of course, but the majority of tokens are not great passive investments. Doesn't mean you can't make money on them if you really follow them or know what you're doing. It doesn't mean they don't have value if you truly partake in the business and are a very active participant in the business, the community. But as a passive investment, it's very different from a security.
Yeah, no, yeah, crypto does not make for good passive investing. I mean, if you kind of look ahead to 2023, like 2023 is probably not going to be a great year for investing, except now that I've said that it probably will be. But if you're if you're an equities holder and you don't really care if stocks just go, if nothing is happening in the stock market, you don't really care because as time goes by, your investments will just naturally accrue value, right? But that's not really the case with crypto. I don't think cryptos naturally accrue value over time. They need they need activity. They need people. They need new people buying them. Really, is the only thing that's as a crypto holder, the only thing you really have to look forward to is more people coming in and buying crypto. You can't just buy things and look back and just let the value accrue over time. I don't think in crypto.
Yeah, no, I think, and again, that distills, I think, a big difference between just look at Bitcoin and look at ETH, right? Bitcoin, there is no business, right? So the only, it's more like gold. I know that the inflation hedge narrative is kind of proven not terribly accurate, but you have the only way for Bitcoin to go up over time is belief in the narrative that there will be an incremental more incremental buyers than people who are just holding it, right? And then, but ETH might be a little different in the sense that as long as there is activity on the blockchain, there will be fees that accrue to ETH, and depending on the inflation or deflationary schedule, it might be a little bit different. But that's very different than the whole asset class, right? It's an asset on the infrastructure play.
Yeah, I definitely think that ETH is the most investable crypto. I don't mean to say that that's not my prediction that it's going to go up the most. I have no idea, but just
Sure.
in terms of just in conceptually thinking about what's an investment, I would say ETH is the most investable. But I'm not. But even ETH, there are some issues, right? Because with ETH, the revenues are denominated in the token itself. Which just makes it the whole thing very circular, right? You can't really put it into a DCF model because the thing you're trying to solve for is the thing that
it's reflexive. Yeah,
it's just very reflexive. So even ETH, you need to kind of believe in the price of ETH in order to believe in the price of ETH, which is just very different than the stock market, right?
Yeah, no, absolutely. I mean, and again, there's some stocks that are different than others, right? You can't just hold Peloton, and I can say this from experience, and think that it's going to accrue value because it's going to, it's been destroying value. But obviously, broadly speaking, yes, earnings accrue, businesses grow over time, and I think the long-term play of where blockchain as a technology is going is as a technology like the bull case in my eyes is essentially that this is a technology that will be leveraged by companies, businesses, people all over the world. It will play a major factor in our daily lives and in the daily lives of these businesses, and there will be significant opportunities, but the mentality, I think, of many in the market that we've seen over the past few years is probably just not terribly realistic nor sustainable. And because of all that, you probably need, we need a regulatory framework for like, what are these things? How can businesses issue them? How are they regulated? How are they managed? What's filed? What protections are in place? And personally, I think that that's something that was, I would have said it was a few years off, 6 months ago. Now, post FTX and what we've seen and who even knows with Genesis and DCG, like I think it's probably a 2023 event, at least a lot of the legwork of regulation. And I don't know, if you have any thoughts on that, but I love bouncing that off, smart people who follow the space.
Yeah, I mean, I assume that stable coins will be regulated pretty soon, which I think is a good thing.
Mhm.
I would assume that CeFi will be regulated in 2023, which I think is a good thing. I personally don't think DeFi should be regulated at all. I don't think I also, for a number of the reasons that we've already touched on, I don't think crypto I don't think crypto tokens are securities personally. For all the reasons that we discussed, that you don't have a claim on cash flows, you don't have a claim on assets, and et cetera. I also don't really see what the point of regulating them as securities is, because you know securities regulation is mostly about disclosure, right? And like, what are you going to disclose about about a crypto token, and who's going to disclose it? Like, it's just all on the blockchain, right?
Mhm.
And it's funny. It's funny when people talk about like regulating ETH as a disclosure, like as a security. Like, who would make the disclosures? Like the Ethereum Foundation? Like, it doesn't even really make
Yeah, I
sense.
mean, yeah, to me that, I mean, ETH is a security. I mean, I'm not going to get into the the like the certain Bitcoin people view, and then not to mention, like, if it's a security, like, okay, great, it's a security. Like, who cares? It's not people can buy securities all day. But I think it does. But from a regulatory standpoint, I think it speaks to um, where can you trade these assets? Where are they custodied? What protections are overtly or not overtly in place? So, if we're talking about DeFi, right, and I want to go in to, Aave or Uniswap and partake in, you know, decentralized banking activities, right? Whether it's trading or lending, borrowing, that sort of thing. Um, yeah, right. So now you can't fall under like the OCC or be regulated in that regard, because it's just it's not the same, right? But our where can it trade, right? And it might just have to be, maybe it is something that just kind of like lives outside the financial ecosystem, and it's buyer beware, but at least that's set in set in place. Um, but at the end of the day, right? Like, someone someone creates these things. Someone writes the code. They could step out and just like turn it on. But I think at the end of the day, in our entire, at least in the U.S., like financial and judicial system, it's always based on the fact that, like, you know someone someone's held accountable, right? Like, who do they go after? And if a person goes, even if it's just a copy paste of a code base or a hard fork or something, I don't, maybe there's something to be said for, like, you can't just wash your hands of it and have no liability to the future. Like, you created this, you can't introduce something into society, and then just like walk away from it. Maybe, I don't know. I guess that's the argument. But I think what you're saying, like, with regards to DeFi, um, and how it should or shouldn't be regulated is I think, that's more of a philosophical discussion. But I think the interesting thing is, like, even if they decide it should be regulated, like, how do you end up how do you regulate it, right? Like who are you regulating?
Yeah. If they try to just shoehorn it into the current TradFi regulatory system, it's not going to work, and it's
No.
going to be a mess. That's definitely I think one of the biggest risks to crypto is that just DeFi gets caught up in the regulation of CeFi, and that basically it just becomes impossible to trade. Like, it just certainly that U.S. residents won't have access to be able to trade it.
Yeah, or you can trade it, but it'd be akin to, like, internet gambling post UGA. Like, how do you get your assets even on there in the first place, and how do you take them off, and what do you do with them, right? So it's that might be the difficult part if they're, because you have like Patriot Act and all this other stuff. You want to make a deposit into, um, Fidelity or J.P. Morgan Chase in the future to go, custody tokens of any sort, right? You can't really the on ramps and off ramps. Um, those are easier to regulate and control than to come up with an entire financial framework. Like right now, like like a 33 Act, right? Like literally written well before computers, let alone the internet. And you can't really shoehorn like the concept of decentralized finance over the internet into the 1933 Act. So like either
Yeah.
things need to be massively updated or they just need to control the on ramps and off ramps. And I don't know the answers. Obviously, no one does. But I think it's very clear to me now that human nature, kind of left to their own devices and given opportunities for the realization of greed to set in, um, humans are not trustworthy. It doesn't mean some are like there are some trustworthy humans, but by and large, they are not trustworthy, and you are going to have problems, and many people are going to get very financially harmed without rules in place, and I think because of that, reality setting in, you are going to, that's why it's called crypto or digital assets now a zero sum game. It's like I don't think you'll see a lot of real money flow in, or a lot of real issuance flow in until there's clear rules and protections in place. And some of that is just, CYA, and some of it is just, well, a lot of it is just CYA, frankly. But I just think, fortunately or unfortunately, that's kind of where we are right now.
Yeah. I mean, it's an unfortunate fact that we are still totally reliant on those on and off ramps. And like you said, humans are not trustworthy, which is the basis for decentralized finance. Taking the
Sure.
trust out of the financial system, and we've just had the hugest, most ridiculous illustration of that with Sam bank run fraud and FTX.
Yeah.
And it's very easy to say that like, hey, FTX was CeFi and this is why we DeFi. But it is an unfortunate truth that we're still dependent on CeFi. One, because of those on and off ramps. Like, how else are you going to get in and out of it? And you do have to get in and out of it if you want it to be anything useful. But also too, because all of DeFi is reliant on fiat stablecoins, and fiat stablecoins are CeFi, right? And we have unfortunately not yet invented a genuinely decentralized crypto native dollar, and it's an unfortunate fact that everybody wants dollars. People.
Mm-hmm.
There are not that many people that want bitcoins. Everyone wants dollars. The whole world wants
Sure.
dollars, and we haven't yet figured out how to provide digital dollars without being totally reliant on CeFi.
Yeah, no, it's a very good point about the trust system. But I mean, I would also point to, DeFi, and again, I think it's debatable what that even means, right? Um, like scares the hell out of me as a participant, right? Like, how many hacks occur, and people are talking about like code audits and stuff, like, just don't know a lot about software because there's always updates being pushed, and code audits mean nothing because there's always someone out there, who sees something that someone doesn't, right? And can hack and steal, and those are irreversible. And how many hacks have we seen in DeFi over the past 18 months where you get hundreds of millions wiped out? Like there's no FDIC protections, right? There's no big insurance backing your holdings. There's no way to reverse that. So that's a trust in the system, but it's also there is a human element to it, right? Because you can have this trustless system, but that trustless system is also operating under the assumption that individual people won't violate the trustless system by taking advantage of it, and that's a scary thought. I'm not sure that can really work.
Yeah, I guess you're replacing trust in people with trust in smart contracts.
Yeah.
Yeah, I mean the whole idea of self-custody is pretty terrifying. Um, I've had a couple of wallets that I just lost the seed phrase to, and it just
It's
you can
incredibly
you can
terrifying.
see you can see your money on the block explorer or whatever, and you just can't get it.
Hmm.
It's very
No
frustrating.
customer service you can call, you know?
So I mean, I'm not like I mean, there's a reason why most crypto volume was happening on centralized exchanges is because people don't want to self-custody their assets. I can't imagine they're ever going to want to self-custody their assets. But that's hopefully something that'll be solved for. Um, I think it's also in that context, it's also worth questioning whether cryptocurrencies are really bearer assets or not. Like I don't actually, it's often said that crypto is a bearer asset, but I'm not really convinced about that because the only thing you ever really take possession of is your private key, right? Like the bearer
Mhm.
asset is your private key, but the asset itself, if it is an asset, lives on the blockchain, right? And it can
That's
be.
exactly right. Yeah. No, that's a very good point too. And then I think going back just a step, because I think to me it's an important point, is like I don't think with DeFi you're necessarily replacing trust in people with trust in a smart contract. I think in DeFi you still have to have tremendous trust in people to not hack your smart contract and steal all your money, right? Because the smart contract can work great, but if someone can go in and hack the smart contract and drain it, like I'm I'm trusting the engineers who wrote that smart contract. I'm trusting the code auditors that they're smarter than the hackers, and I'm trusting that the hackers won't break in and steal everything. So that's a lot of blind trust with no one, um, to turn to if one of those things goes wrong. And then with regard to the bearer asset, yeah, I think that's totally right. And I mean that's just the nature of it. Like it's not a physical asset. You can't touch it. And but there's a reason why we have banks, right? Like back in for like frontier days, if you held your gold, right, someone could just come over to your house and take it from you, and there's not much you could do. So it was always better to go to someone who had better security or more to hold your assets for you. And then over time, there were more regulations and FDIC insurance and things built in to protect people and protect society. So I think there are elements of decentralization that absolutely make sense, and making things like you know, home loans and credit extension, more, objective and more efficient. That could be executed well with smart contracts. But again, like even DeFi, like Uniswap, is that decentralized? Like it's a venture funded business. Like just because there's no equity holders anymore doesn't necessarily mean that it's not centralized. Like there's still people working on the project, right? There's still developers there. There's still token holders who have governance. Like it's not fully decentralized.
I don't know. I feel like the Uniswap code that is currently running will just run forever, right? Like I mean, I think Uniswap V2 is just set in concrete now, right? And it just runs. I don't think the Uniswap developers can fiddle with it. I'm not sure. I'm not deep enough in the weeds in Uniswap to know. But yeah, I would say, certainly most crypto protocols are controlled by multi-sig, and that's, not that is highly centralized. That's not decentralized at all.
Yeah, but I guess again, it determines, I mean, so do you think centralization versus decentralization is just yes or no, or do you think there's a scale of decentralization?
Yeah, there's a spectrum, sure. Um, uh, yeah, and there can be, different use cases at that are best on different parts of the spectrum. Not everything has to be fully, totally Bitcoined, decentralized. But I think decentralized remains the ideal and the target. But I think also it's worth I mean, one thing I think we've learned this year is that people generally don't care too much about decentralization, right? Like, like Tether is still really popular, Um, and I think it's worth keeping in mind that most of the world doesn't live in the U.S., right? So in the U.S. we have access to Vanguard and Venmo and PayPal and stuff like that. But if you live outside of the U.S., it's like really hard to get dollars. So if you can get a semi-decentralized dollar with a semi-decentralized financial system, like that's a massive benefit. And that's probably more important than whether or not U.S. people can get perfectly decentralized dollars in a perfectly decentralized system.
Yeah. Yeah. And it kind of goes back to, you talking about probably seeing regulation of stable coins, which I agree with. I think it's kind of a no-brainer. And I mean, for the most part, they are kind of like unregulated money market funds, in a best case scenario, I guess. But you're talking about kind of a fully decentralized, non-fiat backed stablecoin, which I would be very hesitant to use that word, because then I guess you get into the discussion of more algorithmic stablecoins, which I've always struggled to fully wrap my head around and don't understand them still. But is that kind of something that you think we still need to move towards? And then I'm curious to hear your take on UST and what unfolded there, and how you did look at it, and maybe how you look at it now.
I mean, I wish we could. I wish I could say that I think it's achievable, but I don't particularly think it's achievable. I think one lesson from finance, just generally, not just crypto finance, but finance generally, is I think it's impossible to peg one thing to another thing without holding that other thing. It's not that peg is always going to be fragile, and it at some point is going to break, I think, is the lesson of financial history. So to have a genuine dollar stable coin, I think you're going to have to hold dollars, or you're going to have to hold treasuries, and the only way to do that is with a centralized entity. So I don't personally see how we ever get a scalable. I should caveat it with scalable. A scalable dollar pegged stable coin that is genuinely decentralized and crypto native.
Mm. Yeah, no, certainly not dollar pegged, but I mean, is there a future, do you think, of a more algorithmic stablecoin that, I guess, has a stable value? Doesn't necessarily have to be one USD, but a
I mean,
stable value.
the only way I can imagine that happening is if real world assets were genuinely on chain, so that you could have like a basket of, you could have a coin that was 10% oil and 10% real estate and 10%
Yeah.
wheat or something. Which would be even better than a digital dollar. It would be a digital cost of living token. And I know people are trying to do that. Like Frax has got their FBI token, and there was another one recently that I looked at, Nuance, something like that.
Mm.
But I can't imagine how that's going to work. But that just might be a total failure of imagination on my part. I'm glad that like super smart people are working on it, and if somebody could figure that out, it would be a total game changer, because then DeFi could It could be genuinely independent, and you would only need, some on and off ramps to get in between your regular bank account and DeFi. But then once you got there, it would be genuinely decentralized. But I'm not sure how anyone's going to figure that out.
Yeah, I mean, I guess it all comes down back to the fact that the U.S. dollar is the global reserve currency. So even when we talk about anything, it's still ultimately like priced in dollars, right? Like Bitcoin, ETH are priced in dollars. You can look at them in ETH term and stuff, but they're still like pricing
But
in
with
dollars.
NFTs,
So
NFTs are the only thing.
yeah, I mean, NFTs are priced in ETH, but ETH is priced in dollars. So, I think people denominate it in whatever looks most advantageous to them at the time of the buy and sell. I
Yeah,
get
I mean,
it.
like super long term, it might be that DeFi is effectively the financial system for the metaverse, and maybe when you work in the metaverse, you don't get paid in dollars. Maybe you get paid in ETH, and then everything that you buy in the metaverse is denominated in ETH, so it can just organically become its own uh, economic system.
Yeah, yeah,
That'll take a long time, and that's different than, like, right now we kind of we kind of just want DeFi to just take over TradFi because, like, everything's better, and we just become a better version of TradFi and just take everything over, and that to me seems unrealistic. But but longer term, it could be that that economies grow organically outside of the dollar system.
yeah. I think that I think there's a lot of unanswered questions, especially as it pertains to metaverse and where the world is going there. Again, I think something that will be measured in probably decades, as opposed to we're an instant gratification society, and obviously this is a very volatile world. But I think that ultimately this is something that will have to be measured in decades, just because of the magnitude of what is being done here. And look, it's not dissimilar from the internet, right? The internet is something that was developed 20, 30 years before there was really any like wide scale movement and growth, and then you had a very quick, on a relative basis, .com crash, and then another decade before we really saw you know proliferation of Web 2 and any growth there. So um, yeah, it takes time. So with that said, I guess where do you think we are now in the cycle? Saying, and this is, I guess, caveat in the sense that you said, like, crypto is not necessarily like investable, and I'm sure there's nuance there, and a lot there, but where do you think we are?
I think you just said it. I think that where we probably are is in the .com bubble stroke bust part of the cycle. My favorite analogy in crypto is the speed running the history of finance, and it seems like we've sped run the entire thing this year. But if I had to guess, then I think that we're probably in the .com bubble bust area. And that is a hopeful analogy because the .com bubble seemed ridiculous at the time, but what was happening was that the infrastructure for the internet was being built, and the bubble just sucked in just a huge amount of capital, and a lot of that capital got wasted on pets.com or whatever, but a lot of it got spent on digging holes and laying cable fiber and stuff so that everybody could have high speed internet. And I think the analogy today is that like a lot of money has gotten wasted on Terra Luna and whatever, and a bunch of Ponzi's and things. But also a lot of money has been going into building the infrastructure rails of DeFi. And just like we had no idea what that internet infrastructure was going to be used for in the year 2000, I don't think we can say what the DeFi infrastructure is going to be used for in a few years' time. Certainly, like if you look at the top 20 crypto tokens by market cap, it's a dog's breakfast of pretty wacky things. Like Dogecoin and Shiba Inu are still like top 15. So I don't think you can. Like you said, like crypto doesn't lend itself to passive investing. I don't think you can say like I'm bullish on crypto, therefore I'm going to buy this basket of the top 20 tokens and it's going to be great. I think crypto could be great, and buying the top 20 tokens right now could be a disaster because I don't think we know what it's all going to be used for. And but that's the bull case, is that we've just built the infrastructure and now we get to find out what people are going to use it for.
Yeah, and there's going to be a JDS Uniface and a Nortel and all this stuff, but most things will not be, getting to buy Amazon in a buck and change, in October of 2001. But yeah, no, I couldn't agree more. I think that's a very, very good analogy. From where we are in the cycle, and I will be the first to admit that, I think we hit that .com bust much faster than I would have thought we would have if you asked me this question a year ago, right? I thought we were probably more early 90s, just because that infrastructure was still very, very much being built. But when there's a lot of speculation, obviously, and speculation can compound upon itself. And then the one big difference, I guess, with this versus anything I've ever seen in my lifetime is, take the .com bust, right? Like Fed funds were 6.5%, right? So we were raising rates and the market was flying and the bubble was building. And then it burst and then you cut rates. Here, we had incredibly low rates, easy monetary policy, obviously creating environments of cheap money and speculation, and across, right? I mentioned Peloton stock, right? Like across everything. And now what caused, in essence, the brakes on many risk assets is the opposite, right? So it's the first time I can recall really like the rate, the hawkish dovishness of the Fed moving opposite to the performance of the stock market and risk assets. And there will be eventually, like there always is in every economic tightening and easing cycle, a pivot and a reversal. And I don't know if that happens. Forward curve is telling you it happens next year. Does that mean we just pour more money back? I mean, I don't know. But ultimately, I think you have to look at this as what is the technology? Where's the technology going over the next decade? And how do I want to invest in that or not?
Yeah, not investing advice, but I personally would approach it more like investing in currencies and commodities and having more of a trader's view on it than an investor's buy and hold view.
Yeah, well, that's totally fair. I'd certainly recommend that everyone in the audience subscribe to your daily and to your newsletter. It's outstanding. If you want to just share, a little bit about, where they can find that, where they can find you, and anything else you want to, leave people with.
I don't know. You can find the newsletter on blockworks.co. And my Twitter link is at the bottom of every newsletter. So if you have any constructive criticism, then hit me up on Twitter. And I don't know. I think that's about it. I think we covered a lot.
Awesome. Yeah, I really enjoyed the conversation, Byron. Thank you so much for joining me.
Thanks, Peter.